So welcome good people. We want to discuss an ATD Level 1 Introduction to Financial Accounting paper. This is a December 2021 sitting question that was paper that was done on 15th. It was done on 15th of December 2021. So this is question 2. The following information was extracted from the books of Tom Obi, a sole trader as at 31st August 2021. Purchases and sales, inventory, carriage inwards, staff, salaries and wages, discount allowed and discount received, return inwards, return outward, carriage outwards, rates and insurance, office expenses, water and electricity, bad debts written off, allowances for bad debts, account receivables and payables, rent received, capital, drawings, buildings, equipment, furniture, and then accumulated depreciation for the same, bank overdraft. The figures are agreeing at 29,894 in the total balance. The additional information on 31st August 2021, closing inventory valued at 750, rent received in advance at 60, accrued rates 60, prepaid insurance 30, accrued electricity 80, and during the year Tom Obi took goods for personal use worth 200 if we restrict the zeros without recording. Tom Obi decided to write off additional bad debts amounting to 10,000. Allowance for doubtful debts to be maintained at a rate of 5% of outstanding debts. Depreciation is to be provided as follows. Straight line, 20% reducing balance, and 10% straight line. We are supposed to come up with the statement of profit or loss for the ended 31st August 2021 and statement of financial position as at that date. Now these workings, as you can see, are not that complex, so we'll just go straight to the question and we'll try to factor all of them in. Just go through the additional information, make sure that you have all of them at your fingertips. Closing inventory, rent received in advance, accrued rates, prepaid insurance, accrued electricity. Then you have these drawings of worth 200,000 of goods, write-off of additional bad debts, and allowance for doubtful debts, and then depreciation. So we'll go straight to the question and try to tackle it as we move along. So this is Tom Obi, and we are preparing an income statement. Income statement for the year ended. For the year ended. This is 31st August 2021. Underline, then you can have the three columns, and you can also restrict the zeros since the question has already restricted the zeros. So normally what we do, we start with the trading account, and I can see this question has the trading part of it. So it's the sales, and check if the sales has any workings. So sales is on the credit side. It's a credit account. So sales 21,800. Do we have any workings on credit on sales? Normally it's return inwards. Yeah, we have return inwards. So return inwards, it's 800. Debit side, because these goods are coming back. So 800. So we'll have 21,800 and 800. So sales 21,800, and then return inwards is 800, like that. So you less, you get 21,000. So that becomes our final figure for sales. Then we less the cost of sales, and opening cost of sales, we have always the opening stock. So check the opening stock, which in most cases doesn't have any workings. So opening stock is here, 1st September 2020. Remember, we are preparing for the books up to 31st August 2021. So this is 600. So opening stock 600. 600, we have that here. And then we add the purchases. Now we need to check all the workings that come with purchases, and I'm sure we have the workings because we have carriage inwards. Carriage inwards is found in the trading account. We also have return outwards, and remember the goods that were picked by Mr. Obi, they also reduce the purchases. So carriage inwards, you can see we have here 350. Carriage inwards is the cost incurred to transport the goods to the premises, and since we have these are our purchases was 13,000, Since we have these figures workings, we'll put them in the innermost column. Purchases 13,000, carriage inwards 350. Then we go for return outwards 800. Return outwards is the goods that we had purchased, but for one reason or the other, we are returning them back to the supplier. So we less to show that the goods have left the organization. Then there was something here, Mr. Obi, during the year Tom Obi took goods for personal use worth 200,000 without recording. So this have the effect of reducing our purchases. So we'll have 200. Remember to restrict the zeros. So goods for personal use, 200. So with this, I think we have exhausted all the workings on expenses. So we get the total. This is 13,000 plus 350, 13,000 plus 350 minus 800 minus 200. That gives us 12,350. So 12,350, then we less the closing stock. Closing stock, and closing stock is not found in the trial balance. Closing stock is found in the additional information. So 750, simply come here, less the 750 like that. What do we have? The figure that we get here will be our cost of goods available for sale. And this is 600 plus 12,350 minus 750. That is 12,000. Sorry, there's a mistake here. Return outwards is 800. And see, we have two 800s here. This could 800, 800. Let's just confirm. Return outwards is supposed to be on the credit side. Yeah, sorry. That is the danger with this trial balance, the way it is. So you need to be very keen. So return outwards is 400. Return outward is 400. Because you are losing the goods back, you are taking the goods back to the supplier, so it's a credit entry. So return outwards is 400. Please check that, and that's a learning point for you also. Make sure you are very keen. So this is 400. Sorry for that. So this will give us, let's do it. So this is 13,000 plus 350 minus 600. That gives us 12,750. So 12,750. So this will give us 12,600. Less from that. Yeah, 12,600. So 21,000 minus 12,600. That gives you 8,400. And this is our gross profit. Gross profit. Just like that. So we are done with the trading account. Now we go to the profit and loss account. And for profit and loss account, we start with the incomes and gains. So we will start by finding out the incomes and gains. So go through the question. This is already an income. Discount received. Discount received. Please don't make the same mistake. Discount received is a credit entry. So 600. Pick 600, not 490. Discount received is a credit entry. It's an income. So it's actually a gain, and income and gains are supposed to be credit entries in the trial balance. So discount received 600. So we come here. Discount received. How much? 600. Then check again if you have any other income. Return, carriage. Check, run through. Rent received. We have rent received of how much? 780. So that one also is supposed to be captured there. Rent received. In fact, now that we have two, the best is to add them in the inner column, and then we'll take the total back to the outermost column. So rent received 700, and just in there's something here, some workings on rent received, so we'll come back to that. So rent received, we have identified rent received. Let's check. There's nothing over there. Now rent received in advance 60, so it means 60 was received in advance. It doesn't belong for this year, so we are going to less it. So we'll simply, in fact, rent now will not feature here because of that working. So we'll say rent received 780 less advance rent. Advance rent is how much? 60. So we less that to get 720, like that. 720. So then if we don't have any other income, the total will bring to the outermost column. But if we have any other income, we continue with the list. So there's something about allowance for doubtful debts that we need to be sure of, if it's an increase or a decrease. A decrease in allowance for doubtful debts is supposed to be credited to the P&L account. So let's check. Allowance for doubtful debts to be maintained at the rate of 5% of outstanding debts. What is the rate of outstanding debts? Outstanding debts. Outstanding debts, this is same as accounts receivable. These are the debtors. So outstanding debts is 3410. So 5% of 3410, how much is that? 5% of 3410. So this is 0.05 times 3410. That is 170.5. So this gives us 170.5. 170.5. Then let's check how much is the allowance for bad debts. Allowance for bad debts is 160. This one, allowance for bad debts is 160. So 160 and 170, it means it's an increment. So an increment is debited. So this means this will not find its way here in the income section. So then that means that we are done with this part. So 1320. We are adding the two, 1320, to get 9720. Good. So then we come here and say expenses and losses. So we want to start working on the expenses and losses. So expenses and losses, we start from just at the top here. Carriage in-house, we have done with that. Staff salaries and wages, 1744. So that's how we are going to pick them. Staff salaries and wages. Staff salaries and wages. How much? 1744. But then let's check if we have any workings on staff salaries and wages. Staff salaries and wages. There's no any working on staff salaries and wages, so we pick it at that 1744. And the best place to have this is in the inner central column. Then let's pick the next one. Discount allowed, of course, this is an expense. This is a loss, the business. So discount allowed 490, it's a debit entry, so we'll pick it at that. Discount allowed 490. So discount allowed 490. 490. We pick it as it is. Then next, we go to, we are done with those ones. Carriage outwards, you can see carriage outwards is 450. So carriage outward 450. Carriage outwards 450. Next, rates and insurance 520. Rates and insurance 520. So we come here, rates and insurance 520. Rates and insurance 520. But remember, there was some workings on rates and insurance 520. So we come here, accrued rate and prepaid insurance. So definitely this one will feature in the innermost column. So rates and insurance 520. Then we have accrued rates and we have prepaid insurance. All of them are workings here. So how much is accrued rent? How much is prepaid insurance? Accrued rate is 60. Prepaid insurance is 30. So this is 60 and this one is 30. How are you supposed to treat them? Now, accrued rates, this means that these rates belong to this financial year, but we had not paid. So it simply means we add them back. Then prepaid insurance, it means we paid part of the insurance payments that we made were for the following year. We are not interested in the following year books or costs. So it means we are going to less this. So we add accrued rates, we less prepaid insurance. So this will give us 550, if I'm not wrong, 550. So add all of them and then you will get the answer 550. So we are done so far with this, we are done with that, we are done with that, we are done with that, and we are moving on well. So the next thing is office expenses, 1,000. So there's nothing here, office expenses. I think we are starting to exhaust them. Yeah, office expenses, we don't have anything there. So office expenses, 1,000 is an expenses, so you just list it there. Then next we have that's office expenses. Next we have water and electricity, 720. So water and electricity, 720. Water and electricity, 720. We have workings on electricity. I think I've seen some workings on electricity. Electricity, accrued electricity, see here. So accrued electricity is 80. So it means this is an amount that was incurred this year, but we never paid. So accrued electricity, 70 we add, and we'll get 790. Good. Then, yep, so that one we are done. Now, bad debts written off, 190, but there's some workings on bad debts. Tomobi decided to write off additional bad debts amounting to 10,000. So this is 10, equivalent of 10. So 10, we'll write off 10,000, but remember the zeros should be restricted. So it's 10 plus 10 plus the existing one is, what was existing before is 190. So bad debts written off is 190. Bad debts written off. Bad debts written off. It's 190. Since we have workings, bring it in the innermost column. Oh, sorry, it's not supposed to be there. It's supposed to be here. So 190. 190. So 190 plus 10, which is the additional bad debts, which makes it 200. Good. Now we proceed. Now allowance for bad and doubtful debts. Allowance for bad and doubtful debts. There was an increase. Now, what I'm wondering is whether this increase, should we write off the bad debts first? That 410 minus 10 is 34. I think let's do that. So this will be 34 bad debts, and then we create now the provision. So the increase will be, we'll have to take that 410, which is accounts receivable, minus 10. You know, 10 is the additional bad debt that was just factored in. This one, there was a debt of 10, so that we remain with we'll have 5%. We'll have 5% of 5% of 3,400. This will give us one. I think 71. That should give us 71. Sorry, let me just get 0.05 times 3,400. That gives us 170. 170, good. So the allowance for bad debts is 160, but now with the new provision it will take it to 170. So there's an increase by 10. If it's an increase, we simply debit the P&L account. So we'll come here and debit So we debit. So there's an error here. So we debit this. Increase in provision for bad and doubtful debts. Increase in provision for bad and doubtful debts. This is 170 minus 160. So we get 10. Just put 10 like that. Then we proceed with the question. That is allowance. We are done with that. Accounts receivable, rent received, capital, drawings, buildings, furniture. I think we are done with all those stuff. So during the year, Tom Obi took personal, that one. Tom Obi decided to write off additional bad debts. We are done with that. Allowance, we are done with that. So depreciation. Let's now compute the depreciations, and then we'll be done with the depreciation. So depreciation. Now, the depreciation, we have buildings. Then we had buildings, equipment, and furniture. Buildings, equipment, and furniture. Building, equipment, and furniture. So let's see how it goes. For buildings, it's 2% straight line. So this means we are working 2% of straight line. We get the cost. 2% of 5,000. 2% of 5,000. So 2% of 5,000 is, this is 100. So for buildings, the depreciation is 100. You can have them in the innermost column so that we just work with the total for depreciation. Then for equipment, 20% reducing balance. So if they talk of reducing balance, then you take the original cost, which is 1,000. So it will be 20% of 10,000 minus 10,000. Sorry, it's not 10,000. It is 1,000. 1,000 minus what has accumulated so far, which is 360. So this will give you 20% of 640, and that gives you 128. So we'll simply come back here for under equipment and have 128. So 128 like that. Then we go back to furniture. Furniture is 10% straight line. So this is just 10% of 480. So that is 48. 10% of 480. For straight line, you just take use the original cost. So this is 48. So we come back down here and have 48. So 48. So we add the 3. That is 228 plus 48. That gives you 276. So 276 as our total for that. So let's add all of them. 1744 plus 490 plus 450 plus 550 plus 1790 plus 210 plus 276. That gives you 5510. So 5510. We have the outermost column, 5510, like that. Sorry for that. My zero was going places. So 5510, and this is in brackets. So 5510 minus 9720. 9720. That gives you 4210. 4210. Good. So this is our net profit. This is our net profit. 4210 becomes our net profit. So let's now go to the income statement. This was Tom Obi, second part of the question. Tom Obi, statement of financial position. Statement of financial position as at 30th. Was it 30th August or 31st August? Let me just confirm. 31st August 2021. As at 31st August 31st August 2021. Good. So then we have the columns as usual, the 3 columns with restricted zeros. 3 columns with restricted zeros. Then of course we start with the non-current assets, and in our case we have the buildings, we have the equipment, and we have the furniture. Building, equipment, and furniture. So we get the cost. Here we have the first column, we have the book values, and we pick them as they are in the question. 5,000, 1,000, and 480. 5,000, 1,000, and 480. So just pick them as they are, 5,000, 1,000, and 480, like that. Then depreciation, and here under depreciation we will take the accumulated depreciation 200 plus the current depreciation 100. So for buildings is 300. For equipment it will be 360 plus 128, which is 488. And for furniture and fittings it will be 96 plus 48, which is 144. So 300, then 488, and then 144. 300, 488, and 144. This is now the accumulated depreciation so far. So we less. Here we'll get 4,700. 4,700. Then 1,000 minus that we have 512, and this minus this we have 36, 336. So we add the totals to get 4,700 plus 512 plus 336. That gives us 5548. So 5548, like that. Then we go to current assets. Now for current assets we have, of course we have inventories, but let's just go with the order. So we have purchase and sales, inventory. This is opening inventory, it doesn't feature there. Then we continue, carriage, rates, all this, no. Bad debts, allowance for bad debts, accounts receivable. So that's where we are, accounts receivable. So we start with the accounts receivable. It's only accounts receivable, we don't have anything else. So it's accounts receivable and closing inventory. So let's go to accounts receivable, which has quite a number of workings. So account receivable, remember it was 3,410 minus 10. That makes it 3,400 minus allowance for bad and doubtful debts. So that is 3,400 minus 170. This gave us 3,230. So 3,230. I doubt if we have any other one. Let's just check if we have any other. So then we go to closing inventory. Of course, inventory was 750, if I'm not wrong. And then we check on the prepayments. There were some prepayments here under the prepayments. So closing inventory, rent received in advance. Rent received in advance is a liability. Accrued rates, prepaid insurance. Yeah, prepaid insurance, which is 30. So we have prepaid insurance. I think that's the only thing we have. So prepayments 30. Prepayments we have 30. Do you have anything else? Doubt if we have anything else. So if we don't have anything else, let's get the total. This is 3,230 plus 780. That gives us 4010. So 4010. Then we go to current liabilities. We go to, sorry for that. These figures are not, they are not sticking to where they're supposed to. So let me just delete this and write afresh. Let me just undo that. So we've said prepayments, how much? Prepayments was 30 and inventory was 750. Then we got 4010. So 4010 like that. Good. Then we go now to current liabilities. For current liabilities, now we have accounts payable. Accounts payable which didn't have any working, so we are going to pick it as it is. And I also remember seeing a bank overdraft. So we have bank overdraft, and then we'll go to the so many accruals that we have. So go back to the question, pick the start from up. Let's check. It's always good to check. Let's check. Accounts payable 1300, it's a credit entry. So accounts payable 1300. Do you have any other thing? Nothing. Bank overdraft 1200. So those are the two things we have. Account payable 1300, bank overdraft 1200. Then let's go to the additional information where we have a lot of accruals and prepayments. So we have accruals and these are liabilities. So accrued rates 60, prepaid insurance, no. Accrued electricity 80. So rates 60, electricity 80. Rates 60 and electricity 80. So rates, we have 60, electricity, we have 80. So total we are talking about 140. And then of course we have the prepaid what? Prepaid rent received, which was 60. So that will also feature there. Prepaid rent is a liability because you are holding on to money that belong to the following year and not this year. So prepaid rent 60. What else do we have? What else? Doubt if we have any other thing. So if we don't have any other, we add the figures. This is 25 plus 200. So that is 2700. So we'll have 27 like that. And then we get the total. So 5548 plus 4010 minus 2700. That gives us 6858. And this will become our what we call the net capital employed. So let's see if the other side, financed by section, will balance with that figure. Financed by section. Let's see if it will agree to that figure. This is 6858. So the finance by section, we have, of course, we have capital, which from our question looks like we are not going to have any workings on it. Capital is, I saw capital here. Capital is 2998. Capital 2998. So capital 2998. So this one, capital, yeah, we might need to work them here. 2998. And then we add what? Net profit. And we less what? Drawings. So add net profit, and net profit we get from the question up here. So this is 4210. So we simply add 4210 here, and then we less drawings. Drawings is how much? Remember there was 200,000 worth of goods that were drawn from the business. So our drawings is 140, and then we add those two, it was taken from the business. How much worth? 200. So it's 140 plus 200. Remember to restrict the zeros. So 140 plus 200. This is 140 plus 200. We have 340. And normally drawings we less. So we less that to get the capitalization of the business. That is 2998. 2998 plus 4210 plus minus 340. What do you get? 68, 68. Oh, it was even the answer. Because, sorry for this now. Because we don't have any other thing. Natural, what we are supposed to do is take this, then we add long-term liabilities. Now, this question doesn't have long-term liabilities. Because it doesn't have long-term liability, there's no need for us to have this in the innermost column, in the inner column. So we need to just put them in the outer column. So this was supposed to be here. Sorry for that. It was an oversight. So that we get 68, 58, 68, 58. So we delete this. Then see if these figures look like they are not balancing. We'll just find out what is the cost. Oh, they are balancing. 68. Let me get the total right. 29.98 plus 42.10 plus minus 340. This gives us 68.68. 68.68. And then on the other side we have 55.48 plus 40.10 minus 2700. That gives us 68.58. So the two figures are not agreeing by 10. And I can right away detect where this 10 is coming from. The 10 should be coming from the allowance for bad and doubtful debts. So we simply go back there. Allowance for bad and doubtful debts. It is here. I think the mistake we did is we took 5% of 3,400 instead of 5% of 3,410. So we were supposed to work with 5% of 3,410. I think that's what the mistake is. So that in this case it will give us 0.05. Sorry, that will give us 5% of 3,410. 0.05 times 3,410. This will give us 170.5. Yeah. So this is where the mistake is. So I think let's just go through it and see if we can correct and see if it will balance. Sorry for that. So come back here. Those are learning points. So where are we? Increase in provision for bad and doubtful debts. So this, instead of 170, we'll talk of 170.5. 170.5. 170.5 minus 160. 170.5 is simply 5% of 34.10. So don't remove the that 10 that we created for bad and for bad debts. We don't work with it. So just take 5% of the accounts receivable, which is 5% of that 410, and you'll get 170.5 minus 160. So here we'll get 10.5. So that will give us a total of what is this? This will 10.5. So this will give us, let's just get this total again, make sure that we are right. Instead of 50, so this will give us 0.5. Yeah, and then that figure 9720 minus 55 10.5 will get 9720 minus 55 10.5 will get 429 429.5, like that. 429.5, that will be our net profit. So when you come here, 429.5 Hii swali nimeifanya mpaka sasa alafu nataka ku. Okay, so this thing is not balanced by 10. This is 68.58. This is 68.68. So there's a difference of 10, as we can see. So chances are very high that maybe we just got a figure wrongly. So let's just check our figures again to be sure. Additional information, you need to check all the figures to be sure. This is very important also before you can go the next step of finding out what the mistake will be. So 750, 60, 60, 30, 80, 750, 60, 60, 30, 80. These are additional information. And the person will use 200. So let's just check, especially on this additional information. So 800. Check all this. And additions. Need to check on additions. This accrued rate 60, prepaid insurance 30, water and electricity, so accrued electricity 70, bad debts written off, yeah, this is 10, we worked it, yeah. Accrued electricity 70. Yeah, so you can see accrued electricity 80. It's good you spotted this one out early. So accrued electricity, let's just check here, 80. That explains where our problem is. Accrued electricity is 80. It's not 70. So 80. So 80, this will make this 800. So this will make this 5520. 5520. This will make this 4200. 4200, yes. Yeah, 4200. And so we come here, net profit will be 4200. 4200, good. And then when we add, now we are going to get our 58. So yes, that is the balancing figure. You can see 68, 58, 68, 58, and all these are lessons for you to learn. You need to be very keen with your figures. You don't get, you don't pick on the figure correctly. It will mess you, especially at the end of the question. So net capital employed 800, net capital employed 800, 68, 58, 68, 58. So these are questions that is well balanced, and we've had a very good lesson here that you should always be very keen and work on accuracy. So that makes the end of this question. Let's meet in the next question, that is question 3 of this paper. Thank you, welcome, and you can always subscribe for more follow-ups. Thank you.